A woman once sat across from me holding a rejection letter from her cat's insurer. Her cat had been diagnosed with a heart condition, and the letter explained in fairly dense language that the condition was excluded because a vet years earlier had once noted a slightly irregular heart sound during a routine check, long before anyone knew it meant anything at all. She had done everything right by any reasonable standard. She had bought a policy, paid the monthly amount without fail for 4 years, and genuinely believed she was covered. The exclusion had been sitting in the paperwork the entire time, in language most owners skim straight past on the day they sign up, excited simply to have cover in place at all. If you want clearer explanations of the fine print that can matter most when an older cat becomes ill, subscribe to the channel. I am Leon. I have spent a full 30 years in small animal practice and now work part-time, mostly with older cats. I am not an insurance broker, and none of tonight's video is financial advice. I am simply the person who sits across the table when a bill arrives and a policy someone has paid into faithfully for years turns out not to cover the thing actually sitting in front of us both. Here is the mechanism behind nearly every exclusion on today's list, and understanding it changes how you read a policy from this point forward. Insurance works by pooling risk across many animals that have not yet developed a problem. The moment a condition already exists, or the moment it is judged likely because of something already on record, it stops being a shared, unknown risk and starts being a near-certain cost. No insurer prices that in the same way, and most will not touch it at all. This is not, in itself, an unreasonable way to run a business. It is exactly how human health cover has always worked in places where pre-existing conditions matter too. The genuine problem is not that this rule exists. It is that most owners never actually learn where its edges sit until the exact moment a claim gets refused, which is the single worst possible time to be finding out for the first time. A policy bought early, before anything at all has ever been noted on a vet record, behaves completely differently from the same policy bought after even one small, seemingly harmless note has already gone into a file somewhere. That single piece of timing explains more about whether a claim gets paid than almost anything else on this entire list. Number 1. Anything that shows up on a vet record before the policy started, known as a pre-existing condition. This is genuinely the single biggest source of rejected claims by a wide margin. It does not need to have been formally diagnosed. A single mention in an old file, a symptom noted in passing years earlier during an unrelated visit, can be enough for an insurer to treat a much later, more serious version of the same issue as excluded from day one. The only real protection here is timing. Insure a cat while it is genuinely healthy and before anything has ever been noted, rather than waiting until a first health scare prompts the idea. Once something is on record, that specific condition is very often locked out permanently from that insurer and frequently from most others as well. There is a real distinction worth understanding between a curable and a chronic pre-existing condition. Some insurers will reconsider a condition that fully resolved and stayed away for a set period, often around 12 months, and cover it again from that point forward. A genuinely chronic condition, one that never fully goes away, is treated completely differently and is very often excluded for the life of the policy regardless of how well it later ends up being managed. Number 2. Routine, planned care such as dental cleanings, vaccines, and worming. These are treated by nearly every insurer as expected. Scheduled costs rather than unexpected illness, in the same way car insurance does not cover an oil change. A dental cleaning under general anesthetic can run into several £100s, and most standard policies will not put a single penny toward it. Some insurers offer a separate wellness add-on that covers a portion of this kind of routine care for an extra monthly amount. It is worth asking about explicitly rather than assuming your existing policy already includes it, since the assumption that it does is one of the most common surprises owners describe to me. Afterward, work out the actual maths before adding one of these on. A wellness add-on typically costs a set amount each month and returns a fixed allowance toward routine visits, food, and preventative care. If your cat rarely needs more than a yearly check and a single vaccine, the add-on can genuinely cost more across a year than simply paying for that routine care directly out of pocket would have. It is worth doing that comparison honestly rather than assuming an add-on is automatically good value simply because it exists. Number 3. Anything that develops during the waiting period right after you first sign up. Nearly every policy has a gap, commonly somewhere between 2 and 4 weeks for illness and often longer for particular conditions, during which nothing is covered at all even though you are already paying the premium. This exists specifically to stop people insuring an already sick animal. If your cat becomes unwell during that early window, keep every record and receipt regardless, and ask your insurer plainly whether the specific condition falls inside or outside that waiting period. Do not simply assume it is excluded without actually asking directly, since the exact boundary genuinely varies noticeably between providers and even between different policy tiers from the same one. Number 4. Conditions your insurer considers typical for your cat's breed or type, even in a mixed breed cat. Purebred cats carry the most obvious version of this, certain breeds and certain well-known joint or heart conditions, but mixed breed cats are genuinely not automatically exempt from it either. If an insurer judges a cat to carry characteristics of a breed known for a particular issue, that judgment can genuinely affect what gets covered. Ask directly at the point of signing up whether your own specific cat's mix has been flagged for anything in particular. Getting that answer before you ever need it is considerably easier than discovering it cold for the first time inside a rejection letter. Number 5. Enrolling an older cat in the first place. Many insurers cap the age at which a cat can first be enrolled, or apply noticeably higher premiums and a shorter list of covered conditions once a cat has already reached a certain age. Enrolling at 8 or 9 years old, once things have already genuinely started to change, is a very different proposition entirely from enrolling at 2. If your cat is already older and uninsured, it is still worth calling around since policies vary considerably here. Do not simply assume every insurer treats an older cat the same way without actually asking each one directly. Number 6. The gap between being reimbursed and having the money in hand at the counter on the day. Nearly all pet insurance works on reimbursement. You pay the full bill at the clinic first, then submit a claim and wait to be paid back a percentage after your deductible has been met. On a genuinely large bill, that gap between paying and being reimbursed can be a real, immediate problem regardless of how good the policy eventually turns out to be. Understand your specific deductible and your specific reimbursement percentage before you ever need them, not while you are standing at the counter with a frightened cat and a bill in front of you. A policy that reimburses 90% after a modest deductible behaves very differently in the moment from one that reimburses 70% after a much larger one, even if both look similar on the surface. Some policies apply the deductible once per year across every claim combined. Others apply a fresh deductible to each new separate condition, which can mean paying that starting amount more than once in the same 12 months if your cat develops 2 unrelated issues. That distinction rarely gets explained clearly at the point of signing up, and it makes a genuinely significant difference to what a difficult year actually costs you out of pocket. Keep a card with some spare capacity or a small buffer in a separate account specifically for this reimbursement gap. It is not about distrusting the insurer. It is simply about the maths of paying first and being repaid later, which is true of every reimbursement-based policy regardless of how reliable the insurer turns out to be. Number 7. Elective procedures and anything filed under lifestyle rather than illness or injury. Cosmetic procedures, behavioral boarding, and a range of optional extras generally. Sit outside ordinary cover entirely. This rarely affects most cat owners directly, but it is worth knowing this category exists. So a quote for something optional does not come as a surprise later. Number 8. Alternative and complementary therapies, covered inconsistently at best. Options such as acupuncture or certain rehabilitation therapies are covered by some insurers and flatly excluded by others, with real variation between providers on this specific point. If a therapy like this matters to you, ask about it directly and in writing before you need it, rather than discovering the answer during an already difficult week. Number 9. Cats with multiple pre-existing conditions already on record, particularly an older adopted or rescued cat. An older cat adopted with an existing history can be genuinely difficult to insure meaningfully, since several conditions may already be excluded before the policy has even started. In that specific situation, a dedicated savings account set aside for your cat, built up steadily over time, can end up serving you better than a policy with a long list of exclusions attached to it. That does not mean insurance is worthless for an older adopted cat. It simply means the maths shifts. A policy that still covers accidents and any genuinely new, unrelated condition can be worth having even with several existing exclusions attached, provided you go in with clear eyes about exactly what it will and will not do. Ask the insurer directly for a written list of what would be excluded for your specific cat before you commit to anything, rather than assuming from the general marketing material. Number 10. Premiums that climb steadily as your cat ages, sometimes considerably faster than owners expect. Most policies increase in price every year, regardless of whether you have ever made a claim, simply because an older cat statistically costs more to insure. Some insurers increase gently and predictably. Others apply a much steeper rise once a cat passes a certain age, occasionally enough that owners quietly drop cover at exactly the point their cat needs it most, simply because the monthly cost has become genuinely difficult to justify. Ask directly before signing anything at all, roughly how much a policy has historically increased year on year for a cat of your cat's particular age and type. Insurers will not always volunteer this without being asked plainly, but most will give you a straight answer if you ask for one. Number 11. A claim history that follows your cat rather than resetting each year. Making a claim does not simply disappear from the record the following year. Insurers frequently use claim history when setting the following year's premium, and a cat with several claims in one year can see a noticeably larger increase the next, even if every single claim was entirely legitimate and properly paid out in full. This is not a reason to avoid claiming when you genuinely need to. It is simply worth knowing, so a jump in next year's premium does not come as a complete surprise, and so you can budget for it properly in advance rather than being caught out by it later. Here is what you can actually do tonight, regardless of whether your cat is already insured or not. Pull out your actual policy document, not the marketing page you originally signed up from, and read the exclusion section properly from start to finish. Nearly everyone I have spoken to about this has never once done that since the day they signed. If your cat is not currently insured and is still young and healthy, this is genuinely the best possible time to look into it, since nothing has yet been noted that could later be excluded. If your cat is already older or already has something on record, put the same monthly amount you would have spent on a premium into a dedicated savings account instead, and let it build steadily as its own form of protection. Either way, ask your insurer plainly what the waiting period is, what your deductible and reimbursement percentage actually are, and whether routine dental and wellness care is included or a separate add-on. Those 3 questions alone would have changed the outcome for nearly every rejected claim I have personally seen an owner bring in. If you already have a policy in place, call your insurer this week, not after something goes wrong, and ask them to send you the actual exclusion list for your specific cat in writing. Most owners have genuinely never seen this. Document it all, having only ever read the marketing summary from the day they signed up. Reading it now, while your cat is well, costs you nothing and tells you exactly where you stand before you ever need to know urgently. Compare that written exclusion list against your cat's actual vet history while you are at it. A note from years ago that seemed entirely unremarkable at the time can turn out to be the exact line an insurer later points to. Knowing that now, while nothing is wrong, gives you time to plan around it rather than discovering it at the worst possible moment. I've put together a fuller guide covering how to actually read a policy document properly, the specific questions worth asking before you sign anything, and a simple way to work out whether insurance or a dedicated savings account makes more sense for your particular cat at its particular age. It is linked below if tonight's video has left you wanting the fuller picture. None of this is a recommendation for or against any specific insurer, and none of it replaces reading your own policy properly for yourself. It simply means you are reading it with a clear idea of exactly what to look for, rather than skimming past the exclusion section the way nearly everyone does on the day they first sign up. That woman with the rejection letter did eventually get her cat's heart condition managed properly and paid for every bit of it herself once the claim was refused. What stayed with her longest was not the cost itself. It was realizing that the policy she had trusted completely had never actually promised what she assumed it had, and that the only real defense had been reading it properly on day 1, back when nothing about her cat had ever needed defending at all. She told me afterward that she had genuinely read the policy summary when she signed up, the short version most companies send with a friendly tone and a list of headline benefits. She had simply never seen the fuller document underneath it, the one with the actual exclusions written out in full, because nobody had ever suggested she needed to look for it separately. That is genuinely the gap this whole video exists to close. Not whether insurance is worth having, since for many cats and many owners it plainly is. Simply the difference between believing you are covered and actually knowing precisely what you are covered for in writing before the day you ever need to find out the hard way.